client and US employer right now for target company valuation, private company valuation, financial due diligence, and equity compensation valuation. So I am also working on buy side, sell side companies valuation, which we are going to cover, which is one of our important topic today. I also authored a book. Recently, I launched one book on business valuation, which is a handy guide of professionals and beginners. Receiving good response. I am also an active volunteer on CFA Society India.
जल्दी मुंह धो लेके
Active
जल्दी
on
खा ले, हम लोग
LinkedIn,
जा रहे हैं
regularly
दीदी का
posting content about valuation and finance. So you can find me on LinkedIn too.
4
You
बजे
can
आते
just search Siddharth Jain CFA
आलू का
FMBA. You
फुल्का
can find me
डोसा
over there.
चटनी कंप्लीट
So before getting
गरम वाले
started, let me share my screen with you first. I hope you can able to see my screen now. If anyone can confirm, Neha.
Yes, sir. It is visible.
Okay, cool. Thank you for confirming. So our today's topic is fundamentals of investment banking, right? And as we all know, like investment banking is one of the top area in the financial services industries, which is in very high demand and which serves capital market very well to raise capital, to invest capital, and how we will understand it. So these are our agendas for today's session. Like first, we will go through what is financial services industry and its working. Then we will cover what do investment bankers do. Divisional hierarchies, like there are typically investment bankers are typically divided into three office level. Like you officially like typically heard like front desk, middle desk, back office. So basically, investment banker divided into three parts, and their areas of work also divided into these three categories. And we will understand that. And lastly, we will cover key differences between sell side and buy side. And this is one of the session of this mini course. Rest of the topics will be covered by Sivani Chopra CFA tomorrow between 6 to 8. So you can gain some more insight about some live case studies, how companies raise capital, and how financial analysis statement works in investment banking. So let's get started. So before starting, like investment banking is one of the key area, one of the big part of financial services industry. You all are finance enthusiasts over here. Okay, that's why you joined this session. You want to learn more about this. So we will first start with what in general finance industries and which services it covered and how it works. So financial service industry is a vast and diverse sector that encompasses various business and institution involved managing money, providing financial products, and facilitating financial transactions. Like managing money means like you are depositing money, you are taking loans, providing financial products. Which are the financial products we are talking about here? Stocks, mutual funds, bonds, debt. These all are financial products. So these all cover under financial service industry. And financial transactions means all kind of transactions. There is a currency transaction, derivative transactions, commodities transactions, stock, bonds, everything covers here. It plays a critical role in the global economy by enabling the flow of capital, supporting investments and economic growth, and providing individuals and business with access to finance products and services. Okay. So financial services industry is the backbone of any economy. If you remember the time of pandemic in 2020, what happened in 2020? Everything shut down, business shut down. So, okay, no one can move here and there. So what affected eventually? Stock market. Stock market crashed. Okay, 40% Nifty crashed. US market crashed. Everything crashed. And same happened. So financial service industry and economy, they both they go side by side. Okay, if you see, there are many developed countries in the world, like US is one of them. Okay, or the topper. So its economy is backed by their financial services. Their banking services is top in the world. Their stock markets are like NYSE, Nasdaq, S&P 500. Those are the top stock exchanges in the world, and those are the reasons. Like it is the developed and one of the best economy in the world, and India is also on that path. If you see from last couple of years, okay, India is growing slowly and gradually. People are raising money. Okay, many startups are coming up. Many people are raising funds. Okay, 2022 was a somehow slowdown, but now we are back on track. If you see from all, I think most of you know, like Sensex hits its all-time high. Nifty is on top. Okay, mid cap, small cap, all are high. And why it is high? Because this decade is for India. I'm always telling this to my friends, to my colleagues, and I'm always posting on LinkedIn. This decade is for India. And investment banking will play the significant role in the Indian economy to grow. Okay, how we will cover this? So this is all part of financial services. Now, what cover under financial services? Those are first banking. Banking, you all know. Okay, we use traditional banking is about depositing money. Okay, your father, your grandfather, everyone's started using banking products. They deposit money, take loans, manage payments. Nowadays, it's a digital time. People are not visiting banks so often. If it's not required, they are transferring, because RTGS, NEFT we can do anytime for big amount, IMPS for small amount, and even we can take loans by sitting at home only. Okay, recently I raised an application for applying for a home loan. Till now I have not visited ICICI Bank. Everything done online. Okay, so this is the power of digitalization in India, and banking is one of them, of financial services industry. Next is investment services. Okay, so here this sector include investment banks. Okay, investment banks means those are managing money, those are raising the capital. Top investment banks in India, okay, those are Morgan Stanley, Bank of America, JP Morgan, Citibank. Okay, so these are the foreign institutions which are also having presence in India. But there are some of the Indian companies which also serve as investment banks, which are Kotak Mahindra Bank, okay, ICICI. So these are also investment banks. Which these are the top investment banks, which are the Indian company apart from this foreign institution. So what they do, like this investment bank, brokerage firm, asset management companies, means mutual fund and portfolio management services companies. So these all come under investment services. Next is insurance. Insurance is very well known financial services product. You all know. Okay, it cover life insurance, health insurance, property casualty insurance, and other types of insurance. Reinsurance also come under this insurance category or financial services industry. Means you already have insurance, but you want to reinsure it with the other company. Financial exchange is one of the important part of the financial services industry. Okay, and you all know this. There are many major exchanges around the world, and stock, bonds, commodities, derivatives, currencies exchanged through. Means we can invest through these exchanges, like New York Stock Exchange, Nasdaq, London Stock Exchange, Chicago. These are the major stock exchange around the world. India also has several major exchanges, but widely known are on two. NSE and BSC. Then financial technology, it's short form fintech. You all know nowadays fintech companies are playing an important role in the financial services industry. Many companies are coming up with the like that. They're providing financial services with the tech-enabled operations. Like if you see mutual fund, most of the time it's now the days gone. Like people are filling the form of the that they want to start their SIP, they want to invest lump sum, everything now done online. Okay, you want to raise money, you want to invest money, you want to invest in bonds, not required to visit any branch, any offices, nothing. Everything done on online. Financial technology companies are the backbone. Okay, like digital payment, online banking, peer-to-peer lending, robo-advisory services. Like you receive a call, and many times the robo-advisory services resolve your queries. Suppose you dialed any, suppose you have an account and you dial, like they already provide you 10 options, and maybe 2 or 3 options will resolve your query. So that's no required to speak to any of the customer service officer. So that's a beautiful part of fintech technology. Credit card companies, you all know, 90% of joined here already using credit cards nowadays. That's a common platform. Okay, earlier you used to the common platform for spending money in the US, UK, developed countries, but now India is also not left behind. People are using credit cards for their transaction, for their shopping, for their online transaction. Okay, online shopping, offline shopping, credit card are using, and that's also providing a good flow of money in the financial services industry and a big part of the financial services industry. Regulatory bodies, okay, we know, like earlier, SEBI formed when Hudson Mehta scheme happened. Okay, another financial irregularity came into attention in the mid 90s. Okay, that time SEBI formed and some regulation came into effect in developed country. Already there are some regulatory bodies already in effect, like SEC in US. Okay, Financial Conduct Authority in UK, and we already have SEBI from last 2-3 decades, which is uh, taking care of like nothing like fraud or nothing major like any fraud happen with anyone in the financial service industry. Mainly regularize uh, they regularize financial exchanges and mutual fund companies. Okay, and other like banking operation that regularized by RBI. Credit rating agency, that's also play very important role, and very important when you are investing in bonds or any debt securities, because people are checking ratings of any debts. That is, suppose you want to invest in any gilt bonds, okay, liquid bonds, so you will see the ratings, like how it rated. A plus plus is good, so you check ratings, and they also do the complete analysis of any company, analysis of any product before providing rating. So doing very thorough due diligence before providing rating, that help to individuals and companies before investing or raising capital also. So major credit rating agencies around the world are Moody's, S&P, okay, CRISIL in India, Fitch Rating. These are the some of the big credit rating agencies around the world. Private equity and venture capital, okay, nowadays like in developed countries, these are the common platform to raise the capital. Companies invest through private equity, medium venture capital, in the startups or in the private companies or in the public companies from last 2 decades, like in US, UK, Canada, but in India also it started. If you see, like last 2-3 years, many startup came, many become unicorn. Okay, in a couple of years, in a span of couple of years. Okay, if you see till 2014, there were only a handy couple of unicorns. Okay, but now you see there are many. Okay, so how it helped? Economy helped them to grow, because India is rising, economy is rising, in investment banking services helps these companies and India to grow. And private equity and venture capital are the two stages of development of any economy. So what they do, they invest in early stage companies or growth potential companies. Wealth management, one of the important thing, portfolio management services. Okay, there are many companies like a small company or a family office. There are many big companies also. Those are doing the wealth management, managing the money of individuals and institutions. Okay, managing crore of rupees and giving them good return. They offer investment services, like they offer investment advice, estate planning. Okay, suppose any big family firm is there. Suppose we take the Birla family. Okay, Birla family has the billions of dollar. Their business is there. They want to pass on their legacy to their next generation. So they are having limited knowledge. They are having good business sense, but they are not having that kind of sense, like how to divide this my business, this my entire organization to my next generation. So they take advice to these wealth management professionals. They provide the guidance how to do that. Tax services, because estate planning comes with the high tax, so how to manage the tax. So these are the services providing by wealth management professionals. Okay, so these are the main areas, okay, under the financial service industries and how it worked. Now as we heard the name investment banking, okay, investment has the word banking also itself, okay. So generally people thought like it's a common banking services. Many people don't not having any idea like what's the difference between general banking, merchant banking, and investment banking. So we will understand it little bit over here. Like what's first commercial banking? Commercial banking is the traditional banking, what we all know. If you go to the 8 or 10 grade student or any boy, then he will also tell you. Like banking means deposit the money, doing the FD, taking the loans, transfer the money from one more person to another. This come under the traditional banking. Credit card also part of this services now because all banks now providing credit card. So that's why I included that over here. If I was taking this session around 15 years back, then I might not taken credit cards under this category. But now credit card is also one of the services providing by banking banks. Merchant banking will play a like different or additional role comparing to a commercial banking, and it also somehow resonate with the investment bank, though it's not totally, but somehow. So this provides specialized financial services to corporates, to governments, and to high net worth individuals, like big companies, big person having crores of rupees, 1,000 crores of rupees, government, those want to manage the money. So it involves a wide range of activities, including corporate finance. Okay, government has any one project, power project, they want to finance through any bonds or to taking that company to public. So that can be helped by the merchant banker. Advisory services, project financing, private equity, and venture capital also falls under merchant banking. Though it's a part of investment banking, so there is a thin line difference between this merchant banking and investment banking, and those many times go hand in hand. But that totally different from the traditional commercial banking. Now, investment banking mainly facilitate capital market transaction. Capital market transactions means stocks, bonds, debt, which are trading on day-to-day basis. So that's mainly covering by the investment banking, including the that like their main services are underwriting securities, like company coming up with any IPO. So investment banker, they go through investment banker. They promote the IPO, they promote the company. They also underwrite the securities. Like if the IPO will not fully subscribe, then they will take the risk to go ahead and complete this process, or they will buy the remaining share. And that's also part, like there are two forms. We will understand it later on. M&A activities the majorly handled by the investment banks. Okay, and both buy side and sell side, they are having their different investment bankers, and they mainly do 90% of the work are doing by the investment bank in the M&A. Trading and brokerage, asset management, that is also totally depend on the investment banking industry. So these are the main difference between the traditional commercial banking and merchant and investment banking. Now, what is investment banking? We already understand, but here there are 2, 3 lines like I want to highlight what that man investment banking is all about. So as I already alluded, like it is primary function of assisting the capital market function of capital intermediation. Okay, means you are having money, you want to invest in IPO, you want to invest in stocks, invest in that. Okay, company want to raise fund. Who will bridge this gap? Investment banker will bridge this gap. Investment banks are institutions that are counterpart of the capital market. Okay, that's of this another part, that interacting with the capital markets to raise the money or to invest the money. Investment banker help companies, government, and their agency. I already alluded this. Okay, for issuing securities, selling securities in the primary market. Okay, what is the difference between primary market, secondary market? We will understand in detail in the next session, or maybe in our next batch of investment banking. So due to interest of time, I'm not going to cover that in detail, but I think most of you know what's the difference between primary and secondary market. Who is an investment banker? Okay, what is an investment banker and what he does? An investment banker is a financial specialist who is involved as an intermediary in the merchandising of securities. Okay, as I already told, there are two parties. One is want to raise the fund, another one is want to invest the fund. An investment banker sits in middle who bridge this gap. Suppose there's a money. Suppose we take one live example over here. Recently, we see like Idea Foods come with an IPO. Okay, IPO was very successful. 93 time went up 93% on the list of the debut. I think last Friday only, if I'm not wrong. So that's a company, Idea Foods. They don't know who are the investor, who want to. I think before coming up with the IPO, anyone, I think in the Indian population, hardly 5%, maybe I'm not telling 5%, 1 or 2% knows. Okay, what is Idea Foods, what it does. Okay, how it came with the IPO, investment banker take the responsibility of the Idea Foods. Like we will do all the due diligence, we will prepare financial statement, we will prepare the prospects, we will go through the SEBI, we will do all the necessary formalities. Any queries come, we will handle. Something come, then they do this process. They come up, they go through the anchor investors. There are big anchor investor, mutual fund companies, high net worth individuals. They reach out to them, pitch about the company, raise the fund. Remaining fund raised through the 3 days book building process, like 3 days providing you to apply for this IPO, and you can invest. And after going live, you can invest anyways through the secondary market. But this for this private primary market function that is done by this investment banker. So it is a middleman. You can say the middleman bringing two persons together. You can term it as a, like suppose you want to buy a house, someone want to sell a house, then this term as a like there's one middleman who knows both parties, and that bridge the gap. That's a both a win-win situation for both the sides. So here also that's serving as the party as a win-win situation. You have money, company want to raise fund, and investment banker bridging this gap. Next is importance of investment banking. Okay, so what are we already discussed? What are the importance of investment banking? But here I'll categorize into two categories. We already discussed, but let's categorize. Like for corporations, they want to raise capital. It facilitates the trading of security, thereby increasing the liquidity of the security. What's the meaning of this? Increasing the liquidity of the security. Okay. Now another live example. Recently, you have seen one IPO, PKH. Okay, that's a construction and hotel business management company. They wanted to come up with an IPO. Okay, they started, they did all the formalities, they coming up with an IPO, but IPO was not fully subscribed. That's 0.99, like 99% subscribed, so not fully subscribed. So company withdrawed IPO. Okay, because the investment banker was not able to get the interest of the individuals or the anchors to invest in this company. That's why it was not fully subscribed. Then company withdraw that because they know if they go on listing, then it's going to list on discount price. And as you all, most of you know, like most of the shares are held by the promoters. So if the shares list on discount price, that's a loss of promoters. So what they will do, they will wait for 1 or 2 years, maybe for some time. They will come up with again with some good numbers, like we did in last 6 months, 1 year. This, and they will choose another investment banker, strong investment banker, who has the present in the economy, who has the present in India, who can convince an anchor investor, a retail investor to invest in the companies. If those are like the, I mean, if those are real, genuine, like otherwise, no one can take the guarantee of this company because all know, okay, if the company is good, they can raise money at anyhow. They can go to 3 times, 4 times, 10 times after listing. If not good, then they can go, maybe they can list on 300 and within 6 months they can come to 100. That can happen. So that help corporations. How individuals they can help? Like they can help the people like you, people like me, to providing the investment opportunities to invest in these companies, or another opportunity like debt securities, okay, currencies, commodities, everything handled by investment banker. They providing that services. Most corporations get advisory services from investment banks regarding merger, acquisitions, and divestiture. Suppose I am working as an M&A analyst. I am working for the target company valuation. So what I'm getting the due diligence report prepared by Morgan Stanley, prepared by JP Morgan, and that. They do all the due diligence of the target company. Acquiring company hire investment bankers, like please do all the due diligence if this is a good buy for us or not, if that's a good prospect for us or not. So they do all the due diligence, and after this M&A deal happen, after acquirer pay the purchase price and they buy the company, then we are doing the analysis. We are doing the purchase price allocation analysis. Like we are providing what will be the goodwill price. Apart from this purchase price, what will be the trade name intangible. So that part will be done by us. But before that, investment banker do very useful role while doing all the due diligence and providing advisory services, like whether it's a good buy or not. Okay. So who are the clients? Okay. We already understood what is investment banking, who is investment banker, and who they serve. So who they serve, investment banking clients can vary from sophisticated client, okay, like major corporations, large experienced funds, to small institutions like SME. They are catering everyone. Okay. One is with the 1000 crore revenue to the 1 crore revenue. They serve everyone. Categories are different. Okay. Investment, there are big investment banks, small investment bank, but investment banking firms serve all big and small corporations to raise the fund or for any advisory services. Some of the smaller investment banks have focused on either certain sectors. Like many investment banks are specializing on a particular sector. Like one investment bank is there, one small office investment bank is there. That's it has specialization in IT companies. They know like what's the IT services here, like what's the SaaS services, what the like the currently fintech companies are there. So they have knowledge. This service can grow or not. This service will be a demand in future or not. Like before 10 years, who knows Paytm will come so long. Okay. Paytm was one of the fintech company at the early in the 2010, 2012 when they started. Nowadays, there are many. But that company, this no doubt IPO that was not that much successful, but it's still in the market. Okay? Many people are using, and they are also providing many other services like Paytm banks are there. Okay, when you go and do the transaction, the Paytm machine will pop up. This much money has transferred. So it came along. So many technology companies, so many investment banks are having that knowledge. Like this technology can go further. This will be the future. So they are having specialization. They are also having like another companies having specialized in healthcare industry. So they cater healthcare industry. Those who want to raise the fund, want to invest the fund. But those are very rare. These require very good specialization. Otherwise, you can't recommend, you can't advise without having good knowledge of this industry. Okay, iBanks also can raise money from investment vehicles, CEF or REIT. CEF means closed-ended funds. Okay, in mutual fund, there are two categories, closed-end fund and open-ended fund. Open-ended funds means you can invest at any time after launching the fund. Closed-end fund means before launching, you can invest in, that's a lock-in period. And many times fund closed, but you cannot invest in that fund till the time it closed. So these are the categories. REITs, okay, real estate investment trust and company. So these are mainly catering the real estate investment. Earlier, before 10-15 years, we used to know real estate investment done through buying a house, buying a property, or selling that kind of. But now you can invest through a stock exchange also. REITs are one of the method or one of the area through that you can invest. Recently, also one real estate company came through an IPO, raised money through the REIT route. Okay, so that can be done, and that is the it used to be in the developed countries like US, UK. They used to like REIT companies. They categorize as a REIT, though they are trading in the capital markets on Nasdaq, S&P, but that categorized as REIT. But nowadays in India also, a couple of companies raise fund, real estate companies, real estate construction companies, a group of builders. They raise the fund through as a categorizing as the REITs. They also provide advice for M&A deals. I already talked about this. Real estate deals. Okay. Suppose that's one project. Suppose in Mumbai, there's a Hiranandani is a very well-known builder. Okay. They are having many projects. Suppose they are having one project. Suppose let's talk about this Dharavi, okay, Dharavi, that's one slum area. So they want to do the real development of Dharavi. So many tenders came, investment bankers saw, and Adani property, Adani company finally won the bid. So they are going to rebuild that. So who done this real estate deal also backing by investment banker. And investment bankers do all the things like they assess the project, what will be the funding requirement, what will be the time frame, how much time it will take, 5 years, 10 years, 15 years to complete these projects, and how they are going to raise the money. Okay, promoters are going to do the input their money, how much fund they are going to raise, okay, how many houses they are going to build, and at what price they are going to sell it. So that most of the part done by the investment banker, so they can assess the project like whether it's the profitable or not. Okay. Now, one of the main topic of our session today, like what are the like different hierarchies, different categories of investment banker. So investment banking or investment banker typically in their lifetime as an investment banker work in one of these three area. Okay. So let's discuss this. First is the core business, middle office, or back office. Okay. In the core business, they serve as the maybe underwriting. Okay, underwriting is the main function of that. Apart from that, distributing, advising, on other services. We will discuss this in later slide in detail. But these are the main services cover under the core businesses. Middle office, okay, there's a risk management, corporate treasury services, okay, corporate strategy. Many times investment banking bankers involved in forming the corporate strategy of the company. Compliance, okay, many big firms they are having very strict compliance to do any activities or coming up with any production services. So that's also managing by the investment banker. Back office mainly categorized in the operations and technology. So they are the helping hand for this core business and middle offices. Okay. Underwriting. What come under underwriting? So let's I already have taken one example. So here mainly the underwriting comes under when company want to raise money through IPO. Okay. So investment banker takes the guarantee or taking the risk to sell the securities to the public. If they cannot able to do, then they will take the risk to buy the securities. Okay, so it come under two form. One is the soft sell, like they will take only they will only help out to promote them or to do all the formalities necessary thing, but they will not take the risk. They're not going to buy the securities. Okay, that is one form. Another form is the underwriting. That's come with the, like, we are taking the risk, we are taking the guarantee to sell your securities as a satisfactory price. Means at the price band we will sell it as a good price band. Distributing is the selling function of investment banks. The primary function of investment bank include buying and selling products, buying and selling investment products, stocks, bonds. Okay, these are come under the investment products. So that's done by the investment banks. They play the role. Uh, they they inform to the individuals, to the corporations, like these are the said company want to sell at this price. So all the functions done by the investment bank, and this come under the core function. These are the main function. These are the front office, front desk work, you can say, of the investment banking. Very challenging. Okay, demand very high skill. Your mental and physical stability are going to be challenged because it's not easy. Okay, these are very challenging work and require a good amount of knowledge and uh, patience, and used to be stubborn. That's why they are paying very high amount. Investment banker front desk are getting good salary. They are sometimes getting the percentage of revenue. Okay, if the IPO is successful, then 5 or 10 investment banker who plays the key role, then they will get the huge money if a company able to successfully raise good money. So see, this is all about hard work. Okay, hard work pays you money. So if you're doing some good work, helping company to raise crores of rupees, then I think you deserve to get a good reward for that. So that's come under the core business. Very challenging work, but also giving you good rewards. Advising is not easy. Okay, that's come up with the good knowledge. If someone comes with the IPO, so what's the right time? What's the right amount? And what's the right price? That come under advising, and that's not easy. That's require good amount of knowledge, good experience. Otherwise, you cannot advise someone like Idea Foods came. Then you cannot randomly advise. Uh, Raise it at 700, 800. You cannot advise like that. You should come up with like what are the peers, at what price they are trading, at what price they come up with the IPO, what's the background of the company of Idea Foods, what's the background of the competitors. Okay, and you can also discuss like how the individuals are responding. After that, you can advise. So that's not an easy task. But that's also come under the core business. Okay, no one can advise easily. That's having the good experience, having the decades of experience, having the knowledge that the person can only advise. Others, what come under that? Global transaction banking, investment management, and merchant bank. So these are the other services come under core business. These are the link. This link to this all these category: underwriting, distribution, advertising. But these are some additional work come under the core business banking. Many times, what front desk or a core business investment banker do? They do the initial meetings for these transactions. They set up the role, they set up the floor, they do the agreement. Next work will be done by the middle office and back office. Okay, like me, like suppose if I talk about my example, so that like many US consulting firm has the partner, and they are mainly doing the meeting with clients. Okay, they are taking the engagement, they are bringing the business, so they are doing the initial meeting. That done many times. I am the part of the meeting with the client, but that not mainly required. Partner do the meeting, they set up the floor, like we will provide you these services and we will charge you for this, and then they hand over the project to me. Siddharth, this is the project, this is the acquirer company, this is a target company. We have to do this analysis and we need to provide the report. Then I will interact with partner. And if required, I will send mail to clients, or I can interact with client later on, but not at the starting stage. So that's the thing. So how the things works in investment banking. Okay. So core business, big players, they set up the floor. Then the next work will be done by the middle office and back office. So these all come under the core business. Now, next is the middle office. Okay. So what come under middle office functions of the investment banking? Risk management. Okay. Risk management come under means the many times like IPO failed or any bad trades happen. Something we targeted like this M&A deal is going to complete, but something come, some hurdle came, some questions came, some regulatory compliance came in between. Then middle office is going to tackle that. Okay, and they are going to assess the credit risk if something comes up. So these are the functions of the middleman, middle office. And if required, they can consult with the core business investment banker. If something is very major, is not resolving by the middle office investment banker, then they can reach out to front desk or core business to resolve the query if possible. Corporate treasury, okay, responsible for investment banking, banks funding, capital structure management, and liquidity risk monitoring. So this all come under the treasury function. Okay, many investment banks, they manage the capital structure management. Means suppose any company is there. Okay, suppose we take again the Mahindra and Mahindra. Okay, so what's their capital structure? Their capital structure is 70% equity, 30% debt. Okay, company want to change their capital structure. Company want to do 60-40. How can they can do? They are the businessmen. They are not expert has the expertise in this. So they reach out to investment bank. They do the capital structure management, liquidity risk monitoring. This like what's the liquidity risk? Because that is not that liquid, that stock. Okay, if some company decide to come up with the new products and services, so they can easily sell their stack in the open market or in the through any private investment. But if they have they raise the money through debt, then that is not that liquid. So that's come under like how the liquidity risk management, liquidity risk monitoring that could be done. So that is done by the middle office investment banker. Next is financial control. Tracks and analyze the capital flow of the firm. Okay, how much money comes in, how much money goes out, how much money company required, and why they required. Are they targeting new location? Are they targeting to launch new production services in the market? Are they targeting to go to international? What are the risks? Okay, how much time it will take to stabilize for their production services for their new location? Okay, so that's taken care of by investment bank, like how much money they required, how much money is going out, and that controlling the firm's global risk exposure, as I already told, is also handled, also come under the financial control category. Compliance, okay, as we already discussed in brief, like uh, investment banks are responsible for day-to-day government regulations and compliance, uh, like SEBI compliance, RBI compliance, so many other government rules and regulations. So that handled by investment bankers, because they know if a company comes up with any proposal, then investment banker know this is possible, this is not possible. You need to submit this document. You need to submit this from banks, from RBI. Then we can go to SEBI. So this all compliance work done by the middle office investment bankers. Now, last is the back office. Like there are two categories under two functions, I would say, under the back office work, operations and technology. So they will do the work to prepare the presentation, collecting the document list, okay, sourcing the documents, providing the documents, like sourcing the document from the client, providing the document to the middle office and the front office, managing the technology. They will create the user ID tech and all the logins of the client. Clients and front desk officer can communicate. They can check the documents. They can check the compliance. Okay, so all this done by the back office investment bankers. And many times, suppose you if you are investment banking aspirants, like you want to build a career, so this will be your starting stage. You will work under front desk manager, you will work under middle office manager, and you will learn how investment banking function works. If new company come up with IPO, then you will do all the work to interact with the company who is raising the IPO. You will collect all the necessary document, all the necessary financial statements. You will do all the analysis. How is the profit margin of the competitors? How the profit margin of the company? What will be the this suggesting band price? You can also give your inputs also to front desk and middleman officers, like, sir, I think this is the requirement, and I think we are lacking this documents or requirement. I think, sir, this is not the correct price band. We should go ahead with this. And so they will listen to you. Ultimately decisions are of them, but they will listen to you. So you are going to get this kind of knowledge, this kind of work, this kind of big works in the investment banking industry you're going to do if you work and as a back office operations. Okay, you will prepare the presentation, you will pitch your presentation to your middle office and front office investment bankers. Many times you will also send it to client also. So, and that's very live work, though it's challenging, but it's a live work. You are going to engage with these big personalities. You will get to know like how financial capital work, how capital flow works. So that's the beauty of this profession. Okay. Now, again, one of the important topic, one of the important last topic of our today's session is key difference between sell side and buy side. Okay, we are going to cover here some in brief. Okay, with the interest of time, I cannot able to cover it in detail, but we are coming up with our next batch of investment banking, okay, trainee program. So we are going to cover it in detail. Whatever you are listening today, that's just a 1% or 2%. Okay, but this investment banking industry, it is function. If you are someone want to build a career, so if you want to get good knowledge, then that's one program coming up. Okay, and you can enroll in that program to get good knowledge about that. But here I'm giving you some brief about that. What's the difference between sell side and buy side? So first, like focus, what on sell side focus and what on buy side investment banking focus. So sell side, the sell side of investment banking focusing on providing services to client, primarily companies and institutions. Okay, so that's one. Like again, we will take examples. Now suppose we take the example of debt. Suppose there's one company want to issue a rating bonds, and they approach to investment bankers like we want to raise the fund through debt. They will provide these services, like they will do all the due diligence, all the necessary formalities and compliance to raise the capital. So they are something like they want to sell their securities. They want to sell. Like suppose in merger and acquisition, there is a one party of selling side party. Okay, they want to sell their business. So they will pitch uh, like for the company, like this is the company prospect, is the company's future, and they want to sell at this price. So they pitch to the buyer company. So all this uh, work done by the investment banker. They will prepare the initial public offering, they will prepare the research report, recommendation. They recommend because they are having the connection. All the investment banks have the connection. They know who are the buying parties. So they reach out to buying party, they provide the recommendation, and they many times they also execute the trades on behalf of clients. Suppose there is one buying party, any anchor investor, okay, any high net worth individual, they want to invest in this IPO at the different price brand, 10 rupees less than comparing to what to offering to public, but big amount they are going to invest. The many times they just inform to the client, and the client agree. Everything done by the investment banker. They transfer the securities, they transfer the money to the clients, and everything done by the investment banker. So it's very challenging and big job. This is sell side. Buy side is somehow less challenging because here you are not selling like selling party is always having under the high pressure and it's a challenging one, but buying is your choice because you are paying the price. Okay. Companies come up with the IPO. So companies having the high pressure because they want to raise the fund. If you are not going to invest, then IPO can be failed, like PKH we have seen. But suppose you are the buying party, if you want to invest, then that's your decision. Like anchor investment, like so buy side investment banking focus mainly on managing the investment behalf of clients. They are having the big clients, big corporation, big high net worth individuals. They are managing the money of these big parties. And typically institutional investors such as the mutual funds, pension funds, hedge funds, private equity firms. Okay. So investment banking firm cater these parties. Suppose there's one PE firm, they want to invest any good technology company. So what buy side firm will do, they will check like what are the prospects in the market. If any, they consult with the sell side investment banking firm, like any prospects available for any IT companies, those who want to sell their business, have good prospect, has good future. Then they inform to clients like, I think this is a good investment for you in future, because private equity firms they invest to generate the returns. They are investing billions of dollars today to get good return in next 5 to 10 years. They want their 100 billion should be 200 300 billion in 5 to 10 years. They are having interest in that. They are not having any knowledge which is the good company, how much money it should be as. That would be done by the investment bank. And investment banks charge good amount of fees. They charge percentage of fees. $100 billion, then they charge 1%, 2% if deals go through. Okay. So that's the challenging part, or that's the important work in this biceps. It's like the focus. They focus, both has the different focus. Client relationships. So sell side professional work closely with corporate clients, helping them to raise capital like through IPO, facilitating merger and acquisitions, like they are facilitating target company, sell side companies, and providing strategic advice. Strategic advice means they provide like you can raise the money at this price, you can raise this much money. What are your expectation if money comes in? Okay, you targeting new location, you want to clear your debt, you are targeting new products and services. This is suitable for you or not. So this all kind of work done by the investment banker on the sales side. What's on buy side? They are focusing on servicing interest of their client who typically institutional investor. Institutional investor means like mutual fund, pension funds who are buying these products. Those who are buying the shares of the IPO company, those who are buying the debt securities, those who are buying the selling company. And what's their goal? Their goal is risk management. And what's the client's goal? Like, suppose any PE firm is there. So what's their goal? Their goal is to double their money in 5 to 10 years. I want 25% return every year. That's their goal. So is their goal feasible? What are the companies available in the market that can provide this return? So that all this goal and risk management done by the buy side company. So the client relationship is different between sell side and buy side this way. Research. Okay. Both firms do research. Sell side company do their own research. Buy side firm, they do their own research. Okay. Sell side firm focusing on what the companies available in the market, what's the trend, industry trend, what's the market trend. They publish the research report. They provide the recommendations. Okay. They also distribute to the clients, the prospect. These are the selling parties. These are the IPO coming in if you want to invest. Okay. Sell side research aim to provide valuable insights and recommendation. Okay. When that's see here, not you and me, through to whom investment banker is going to come. Okay, we are just investing 15,000, 20,000. Our family members, 4 applications, 60,000, 1 lakh maximum. But here they are catering to big institutions, those who are investing billions of rupees. Okay, so you cannot convince them easily. Okay, out of 10 to 20 recommendations, they invest in only in one. Okay, if suppose there is any high net worth individual, Rakesh Junjunwala's firm is there. Okay, it's firm managing his money. Okay, his wife or his associates. So if someone come up sir, this IPO is coming. If you want to invest in Anchor Book, so they do the all. So you require to do that kind of pitch. You need to come up with that kind of prospect, like they can invest. Otherwise, they cannot easily invest because it's a big amount, big money. So that's you need to provide valuable insights. It's not that easy work. You need to do thorough due diligence because the questions come to you when you go to them. Okay, the startup raises the money. So when they pitch their business, though, okay, the questions come to them. That's not that easy to handle. You have already seen the Shark Tank. Okay, in Shark Tank, you know, sharks are not investing in all businesses. They invest in which their interest lies. If they think their money can be double in 3 to 5 years, then only they will invest. Otherwise, there are many products and services available in the market, so they will not invest easily. So that required good insights, and you can able to cater any kind of questions come to you. So you need to do thorough research before in the sell side. Buy side firm often have their own research team. Okay, so yeah, that's the one difference. Like sell side firm, they're not having their research team. They generally depend on the third parties, but mostly buy side firm has their own research team. Okay, and they do all the thorough due diligence, like Morgan Stanley and JP Morgan. They have their own research team, and they do all the due diligence. They do all the research work of the companies, of the industry, of the market trends, what are the potential risks, and who are providing the recommendation. So they are doing all this thorough due diligence. Compensation structure. This is very important. Investment banking services are challenging, require good amount of time, knowledge, okay, decades of experience. But this all pays you off when they pay you. They pay you a handsome amount of money. How they pay you? In compensation structures like sell side, compensation sell side investment banking typically includes a combination of base salary and significant bonus tied to the performance. Like suppose you are taking the responsibility of raising the money through IPO, so that's any fixed price. Like what percent of the this money you are going to raise, like 500 crore you are going to raise, so 1% will be paid to you after everything will complete. But performance bonus also tied to that. Suppose in 1 month company the company is trading at 30% or 40% up comparing to the listing price, then we will pay you 2% more. Okay, otherwise it's not trading, then you are going to get the base salary only. And their bonus also influenced by the revenue generation, deal flow. So here it's coming like M&A deal. Suppose company able to successfully sell the company. Suppose any M&A deal that successfully that completed at good price. Buyer company bought the company at a good price. Then you will also get this and individual performance fee also you will get. So in the sales side, though it's challenging, required good knowledge, hard work, but they pay you handsomely. Client pay sell side handsomely because they solved their problem to sell their business to raise the capital. They're all the these big works are done by sell side companies, so they are paying heavily, handsomely, I would say. Buy side compensation structure mostly tied to base salary plus the return they are generating. So suppose any PE firm is there, okay, and buy side firm recommended, you can invest in this company, and PE firm invested. You got your base salary 1% of the deal, but after 5 years, after 2 years, you got handsome return. You were expecting, like client PE firm expecting 25% return, but company got 40% return through this investment. So that also tied to your return. Suppose company is generating good return, then every year when the return comes, then they will pay you performance bonus like 2%, 1% of the investments. So that's also like buy side also required good research. You cannot recommend any company. Okay. You should do thorough research, then you can recommend, then you can invest your money, your clients' money into their business or into their services. Because your performance bonus, your money also tied to the client's money. It's a win-win situation to both the parties. See, whether it's a sell side or it's a buy side. Okay. No investment banker is only working for their best salary. They are working mainly for their performance bonus also. Because if the and that's also bring the credibility. If you worked well for one client, then they can recommend to another client. If you're not going to serve, if you are not serve well to one client, if you're not able to suggest good investment banking services, then you are not going to recommend it. So that's also bring both money and credibility both. Suppose no, this work comes up with the no company want to shut down in 5 to 10 years. Like Morgan Stanley, JP Morgan, they are into business from decades. Why? Because they are providing that kind of services. Kotak Mahindra Bank, ICICI Security, they are Edelweiss, they are into business because they are providing that kind of services. They are getting recommendation. That's why they are into business for so long. Though it's very challenging part, but that's why they are in the business. So both are having the different compensation structure, different clients, like research and that, but both are working to get good business through recommendation and through the performance bonus. Risk and reward. Okay. Actually, before coming to this, I already discussed about this. But again, I can discuss that. Like sell side professional face the risk related to market fluctuation, client demands, and the success of the recommendation, which we already discussed. Okay. Like suppose company proposed, like they can sell to this client at this price in M&A deal, and they sell like at the $250 billion, they can sell to this client. But later on, they realize actually the another party is also available at the $270 billion. So that also like come up with the risk. Like they are not going to get the money because they another client has might provided them high amount. So before providing any recommendation, they should see like this the best recommendation we are providing. This the best buying party who can pay the good price for this their products or for their companies. So their potential reward can be substantial, especially if they are successful in generating revenue and building strong client relationships. So, like client relationship is also important. Like if one client has uh, many companies under one parent company, they hired one investment bank to sell one subsidiary. Transaction was successful. Both made good money. Client, investment banker both made good money through this one transaction. After 2 years, that company want to sell their another subsidiary. Then whom they reach out? They will reach out to the same investment banker. Why? Because they help them to raise good money easily, that no consequences they face. So that build credibility. So if they cannot, if you have not served well, then they are not going to come to you again. So that's the risk and reward. If you are able to cater it well, then you will get good reward. Other, that's a risk in managing this relationship and this money also. What the risk and reward for buy side? Buy side professional bear the responsibility of managing client funds and generating return, and this is not easy. Okay, you already know, because many of us, like you and me, are investing in stocks and bonds. Okay, hardly we are going to generate the money. Okay, because to get the sense, like which is the good investment product, which is the good investment stocks, and that it's required good knowledge. It's that not easy. Why mutual fund companies are able to
अलमारी
generate
में
good
अच्छे से
return?
रख ले एटीएम में
How
जाके
they
डाल ले
generate
हमारे
12,
कने
13,
टाइम नहीं है
15,
बाप
20, 25% return? Many mutual fund companies are generating higher return than the Nifty and Sensex. How they are doing? Because they are having decades of experience. They are having knowledge to manage the money of the client. Okay, and that's the return for them. Mutual fund companies, they are having the percentage of bonus or base salary plus bonus. If they are able to generate good return for their clients or for the individual or institution clients, then they can get the good return. PE firm also, like any companies, anchor investor, if they able to generate good return through the investment, through the recommendation of buy side investment bank, then they get the performance bonus through that. And that is also a risk come to that. Suppose they're not able to do that, then they are not going to get the reward. Then the same goes with, like, if you're able to cater the risk very well, then you will get the high rewards. Then both go hand in hand. So here is the end of the first part of our today's presentation. And thank you for your attention so far. I hope you got some good insights about how investment bank works, what's the key difference between commercial and merchant banking, investment banking, what are the different functions of investment banking, what are the sell side and buy side difference at the different area. In the next session, which is going to which is going to host by Shivani Chopra, CFA, tomorrow, and she will walk you through how investment bankers raise capital for their client, what are the financial statement analysis the investment banker should do, how that's play an important role in raising the money, and she will also cover some live case studies. So I think you should spare you some time, and you should go ahead and attend that session to get full knowledge about this process, about this investment banking services. And we will take some question first, and with what the time permits us. So let me go through the chat function.